Hi, everyone. This is Joanna Krzepkowska. I'm a real estate broker in the state of Illinois.
And this is Matt Medinger. I'm a lender with the Money Store in Illinois.
So we are here today to give you an update about the real estate market. And I know Matt has something exciting to tell you.
So we should be seeing on September 18th, the Fed has been talking about either cutting a quarter point or half point, which would be really nice because it doesn't directly impact mortgage rates, but it's really good because the whole market, kind of takes that into account, and we should see a nice improvement in mortgage rates. So we've been slowly coming down, and things are definitely improving. We were mid sevens, maybe 6 months, 8 months ago. We're down into the mid sixes now, which is awesome. Depending on your scenario, obviously talk to your loan officer, but we're slowly heading in the right direction. I know it's not the quick drops everyone wants, but I feel like by next year, no one obviously knows what's going to happen, but we may see upper fives next year. So we're definitely headed in the right direction. It's really exciting.
Yeah, and from my side, I'm going to give you some statistics. I was looking at everything this morning, and we definitely see much more rentals right now. And what that means, it could be that, investors are holding their investments, they're renting them out, and people are staying just longer at those places. We do have a lot of investors also that have been playing with real estate game for the past 30, 40 years, that they are liquidating their investments. We see a lot of vacant properties that are hitting the market, so that means that instead of renting them out, they're gonna just make sure that they can capitalize on those. So that means also that we're gonna see definitely less rentals. Of course, the school started already, so that has something to play as well. And we also know that people that are thinking about renting now gonna look a little bit closer into buying, just because there is not enough rentals out there, and if there are, they're extremely expensive. That's why the investors are holding to their investments, because they make finally a better cash flow on those. So that's what we see right now, definitely shrinking and a lot. But we also see that the market is finally normalizing, right? Like, we were talking about sellers market for so long, and we finally see more houses getting on the market and houses that are sitting longer. So why they're sitting longer on the market, that a totally separate subject, right? We can make the whole new video about only that. But just to put you in the perspective, we have about 6,000 homes that get on the market every week, and then about 2.6 go under contract. So half of them, the other half will be sitting on the market, because of the pricing or because of the condition, or the price that, of course, is not priced right to the condition. So we definitely see that. And we also see this week that there's a dip in under contract houses. So we were just speaking off the camera that this may be related to you guys waiting for the election, waiting for those interest rate to go a little bit lower. But then also, I want you to make sure that you understand and take advantage of this, what's happening right now, because you have much less competition. If you've been on the market for a while and you've been looking, and maybe you stop for a moment, and Matt can talk a little bit about this a little bit more. I think if you even go under contract right now, you don't have to like your rate for quite some time, and you can play with it. And Matt is in charge to kind of checking the market every day and directing you what's going to be the best option for you. So if we're gonna lower the interest rate, there is another pool of buyers that's gonna hit the market right away, and then you're gonna have more competition. So right now, I see we can definitely negotiate on houses that are sitting on the market longer. We don't have to stress about that buyer's agent commission, because we can negotiate that in. If we have a very hot property that is on the market one day, that's going to be hard. But if we're going to go after houses that are overpriced, that's sitting on the market for a long time, now you have the power to negotiate the price, the commission, and then the overall condition of the house. So I see that as an opportunity for the buyers. So I wouldn't wait. If you have that cash sitting in the bank, you're ready to pull the trigger, why don't you look at the houses that are a little bit more expensive that are sitting on the market, because you can definitely negotiate on those 10, 20, $30,000, depends on the situation. I was showing a house last week that was listed at 450. For me, this house was worth 400. So I feel like sometimes people just think that they have a great house and they can ask for it whatever, but with the buyers and with the market and with the buyers being on the market and searching and seeing other properties, after a while, like a month or two of looking at different homes, you kind of have an idea how much the house should be priced, right? So $50,000 is a lot of, like, it's a huge adjustment, right? But I think if you start negotiating, you may get that house for 25, $35,000 less so than the asking price. So this may be something that you want to take advantage of, and then maybe wait and like your rate a little bit later. But can you talk about this a little bit, how it works? Like, because some people think that if you check them, right, you gave them the interest rate, that's the interest
Mhm.
rate they're gonna get. But it changes, right? It
Yeah,
may change when
yeah,
we get a contract.
yeah, and it definitely so what happens is when you get pre-approved, it's just the rate that day. So once you get under contract, we have a conversation, would you like to float? And I kind of give my opinion. Right now, obviously when you're in an upward market where rates are rising, you want to lock right away because it's probably going to increase. We're in a downward trend right now. So what we're tending to do, unless the borrower wants to do that, wants to lock right away, we can also do that. But I kind of recommend just floating because we should over the next, like I said, about the next year, see rates continue to slowly move down. We'll have some hiccups where it will move back, two steps forward, one step back kind of thing. But overall, we should see it going down. So a lot of times we just float, see how much gains, we can pick up in the contract process. And then, you need to float or you can float up to about 5 days before closing, and then we need to lock it in just to do the paperwork and do the things we need to do to close the loan. But I
Okay.
think, like you said, I think we're kind of in the calm before the storm. I think people don't realize how much rates are moving, lower. And when they do, and the election's over and all that stuff kind of kicks in, I think we'll be in a really good place where the market will pick back up. So now
Right.
is a good time. There's not as much interest. So a lot of these houses, you might have a better shot.
Because this is what we worry about too, that if the rate's gonna get to the certain point, we may see, buyers are fighting for houses again because we still lacking that inventory, right? I mean, the gap is closing. We definitely see more houses, but is it enough? If all those buyers all of a sudden is gonna come back to the market,
Right.
you guys gonna
Right.
have so much more competition. And then, if this is something that we look even in a spread of a year, right? Even if you buy something right now, you can always refinance, and Matt can talk about that at the meeting with you guys a little bit more so you understand how it works. But definitely, if you want to avoid like fighting for the property or overpaying for the property, this is the time. Like, that's why investors are extremely active right now. They're waiting too sometimes, but if someone has the money, if the deal arrives, they want to go for it right away. And usually, and just think about it too, there are some people that are still going to use the fall market to put their houses on the market and sell them. But there are, like, if it comes to like um November, December, January, we usually see people on the market that have to put their property on the market. So those are even the bigger deals. That's why you see a lot of investors buying in those months, because they know that this is, motivated seller. And if they're gonna sit on the market for a little longer, oh man, this is a great deal. We're gonna go after that. And then, once the February, March will be here, we're gonna see definitely if the interest rate will go down and we continue on the same path that we did this year and last year, we're going to see way more homes on the market. yes, you will have definitely more homes to choose from, but at the same time, you will have the buyers that will be going probably after the same homes. So, like I said, it's probably not going to be as bad as it was this year or last year, but the market is normalizing, but at the same time, you're still going to see that competition. So, it really depends where you want to be and how soon you want to be in the house. But I will definitely take the advantage of the housing market right now, just to kind of get in without that competition above your head and overpaying for the property.
Definitely. And now is the time to strike. And one of the stats, I don't remember exactly what it was, but it was, I believe every 1% drop in interest rates, it unlocks another million borrowers. So that just goes to show you, even if a lot of inventory comes onto the market, there's still a lot of people waiting on the sidelines that are ready to jump. And it's just more affordable for them, or maybe they couldn't afford the property previously and now they can, which just
Yeah.
shows you that the prices are going to jump because they can now afford that house. They're going to bid up, everyone else bids up, and it continues the cycle. So right now, you don't have that situation. It's the time to kind of jump in before that happens.
Right, and then it depends on what market you are in what market you are in, because if you are, let's say, in the suburbs and you can afford a home for like 350 or 450, not afford, but you can buy a house for like 350, 450, great. But if you are in the city looking to get into a nicer neighborhood, that is not the pricing in the city for like Lincoln Park or any other places out there. So you may be very limited. And what Matt just said, that 1% can like really change everything. Maybe you can get into the market that previously you were not able to because of the pricing. With the interest rate, you can afford more home. So that's why we experienced what we did during the pandemic. I know it was like a stop for 2 months, and then when we start really explaining to you guys how much that interest rate make a difference, then it's like, oh my God, I could afford 250 home and I can afford now a 500,000 home. And it's not going to be such a huge difference with 1%, but still it's going to open door to maybe that next neighborhood so you can level up. Or maybe that's going to be enough for someone like Matt said to afford the house in general. So that's going to be like so exciting, because we know there's so many millennials, there's so many young people that are waiting to get into the house ownership, and you guys are excited, you waiting. So this is definitely something that we are excited about as well.
Definitely. And there's more 25 to 35-year-olds living at home. The
Mhm.
last time there was this many, I believe it's 17% of them are living at home with their parents currently. The last time that happened was the 1940s.
Wow.
So it just goes to show you, I'm sure a lot of them are at home saving down payments, paying down bills, getting ready to buy, waiting for something to happen. And so all that pent up demand is going to hit the market at some point because a lot of them will not live with mom and dad forever. A lot
Right.
of them at some point will say we have to go. So I think that's coming into the next year. We'll start to see that. So it's definitely coming.
Right. And then last word to the sellers, because I feel like we've been spoiled. All the people that were like selling their houses in the past few years, they were like, yeah, whatever, just put it on the market. It's going to be quick, right? Well, guess what? It's changing already. Like I said, 5,000, so 50% of homes are going under contract. Um, the other 50 sits on the market. If you price wrong, you're going to sit on the market. If you're not going to be willing to pay the buyer's broker to bring you a buyer, you're going to sit on the market, or you will not be shown. So just be graceful, I guess, about the whole process,
Yeah,
because soon
right.
enough you guys gonna have so much competition. The market is changing, that it's not gonna be that easy. That if you will be putting the house on the market with unexperienced agent, or you're not gonna listen to your agent, you're gonna
Mhm.
suffer, because the market is changing quick. And you don't want to be chasing the market. You don't want to waste your time and sitting on the market. There are strategies that we're offering to the sellers that can help you sell your home still quicker. I'm not going to tell you what it is. You have to make an
You have to
appointment
call
with me,
Joanna to
but
find
yes,
out.
there's still some, tricks that we have in our sleeves. So, but definitely listen to your agents. We know the market, we live the market, we check the market every day. So we definitely want you to understand that yes, you have something that everybody wants, but at the same time, you have to be very smart about placing that on the market for buyers to see.
Yeah, things
Okay.
change quickly.
All right, that's it, you guys. We wish you a really great week. And then if you have any questions, we are here always for you. So don't hesitate and give us a call.
Have a great weekend.
Thank you. Bye.